and I know you were AP Wine originally. So how did the whole
Mhm.
evolution of Spectra happen?
Yeah, I'll give you a quick background on myself and then maybe run through the AP Wine story to Spectra. But first of all, I started in DeFi. I've been in crypto for a long time, just like a lot of people. I found it through a variety of different ways online. Maybe I was searching for some illicit material online, stumbled upon Bitcoin, fell in love with the message that it was talking about, and didn't really know much. I just bought Bitcoin. I just bought some of those early cryptos. Ended up actually my favorite one that I wish still existed was Ron Paul coin. That's one that I have very fond memories of. But outside of that, I ended up stumbling upon DeFi, gosh, mid 2019, um, and fell in love with kind of like the message that was there. I was actually not super. I was working in treasury at a treasury in the treasury department of a corporation, so I knew a little bit about finance, but I've learned so much just being able to work in this field. Started at Harvest, started at Balancer, Socket, a variety of different protocols, Bungee, and since then I've now been at Spectra AP Wine since 2024 when they launched their V2, which is a fully permissionless, but not to get too far ahead of myself. But I've known the team for a very long time. There are a lot of connections. Are actually Harvest Finance, one of the OG yield aggregators, actually invested in Spectra's first like pre-seed round. So there are a lot of connections that I had. I knew the team shipped very well. I knew that they were very, very productive. I knew that they were very, very smart. Actually, Gaspard, one of the co-founders behind Spectra, invented the math that every yield trading protocol uses today for yield trading, like on chain. So that's something I like to brag about that he never says, but I say it every chance I get. But that is like a little bit about my background. AP Wine, one of the first yield tokenization protocols, kind of what they saw. And I think it was just a little bit too early when they originally launched because it was back in 2020 and just the market wasn't ready. Like nobody understood what PTYT was. Nobody understood what yield trading even was. They didn't realize the full scope of this market in TradFi. But V1 was on Ethereum and Polygon. It was a complex UX. Then we rebranded to Spectra. It was a complete architectural rebrand. This actually happened in 2023. They closed shop on their AP1 V1 product and they focused on the V2 rebrand and relaunch. And this is a full architectural rebrand. Just like I said, it was they shifted from kind of this very permission launch style to fully permissionless, completely reworked everything in the protocol from top down. Got several audits done. I think there's been 3 or 4 audits that have been completed, as well as did an APW like token migration. So the original APW token was one of the first VE tokens that launched after Curve. Fully migrated it to Spectra, which is now natively on Base with V33 models, very similar to the Velodrome and Aerodrome model. So yeah, there's a lot that I could say. We launched V2 in 2024. That's when I came on. I was sincerely like I've worked at a lot of teams in DeFi. I've done a lot of different roles, is what I'll say. And I was super impressed right away with both the professionalism of the Spectre team as well as just how quickly and how productively they shipped. Like there are probably 10 different products that are unreleased related to yield trading that the team has put out. And I was just amazed that they could do as many things as they were and do them well. Every time we get around teams, one of the first things they say is, wow, this code is immaculate. When we got the audits done, they were just amazed at the quality of the code. Our first version of Spectre V2 was based on Curve Crypto Swap V2 pools. And not to get too far down this road, and I'll stop talking in a second, but the Curve team had like no help with them. Like they didn't help the Spectre team work on these pools, but they said they mastered it. They were just amazed that somebody could wrangle this like semi-complex mechanism and then actually make it useful with a new primitive. So yeah, I've just been amazed by the team. I'm really happy to be here, and yeah.
That sounds pretty nice. I mean, particularly the professionalism is something that I would say the majority of crypto and DeFi teams still lack quite significantly. I think that is the main reason why we are at the stage of the industry where we are at right now. It's not only like markets and lacking distribution; it's just a lack of industry internal discipline as well.
Hmm.
Given that yield trading has become one of the pillars of DeFi yield farming, capital allocation, and just the overall DeFi stack ever since, I would say, mid 2024, when all the eigenlayer and restaking farms came up. I think that was, at least for Pendle, their big breakthrough moment. Where would you say is yield trading standing right now as a primitive, and how has it evolved over the last 2 years?
Yeah, it's a great question. And to even throw even any additional context here, I forgot to mention this. When we relaunched V2, it was actually shortly after like the point meta had reached its fervor. So we've been playing catch up ever since, and I'm happy to do it. We're happy to build with Pendle. We're amazed with what they put together. Not to get too far ahead of myself, but yeah, we've been happy to play catch up and for carve out our place in the market. We think that we have like a very unique offering comparatively. But anyway, to focus on your actual question, we can kind of think of it like DeFi as it is in layers. And I wrote this down, so I want to make sure I say it right. Um, if we think of DeFi and layers, you have the settlement layer, the lending and borrowing layer, yield generation, and then essentially on top of this yield generation layer, you have this yield trading and structuring layer, which is where Spectra lives. And then you have portfolio management. We sit in that fourth layer. We don't generate yield, but what we do is we give users the ability to actually decompose, trade, fix, leverage that yield. So in ChadFry, the interest rate derivatives market, I believe, is 500 trillion, 600 trillion, somewhere in that range. And this dwarfs the underlying bond market. So the bond market is huge. People think, wow, bonds are made. That's what a lot of actual products are today in DeFi, is they're just built on top of this bond market. But the interest rate derivative market is larger, and Spectra is part of that infrastructure that's there. So it essentially just becomes like the connective tissue, between yield generators like Aave, Morpho, et cetera, RWA issuers, and capital allocators. And, where the price, I would say, like Spectra, Pendle, yield trading protocols are the price discovery layer for these interest rates on chain. So hopefully that makes sense.
Yeah, I've shilled yield trading and interest rate trading since late 2022, when I held
Mm.
some guest lectures about DeFi at my university back then. Because I thought, intuitively, just looking at the market dynamics in traditional finance, like this is one of the opportunities to come on chain very soon. And I mean, we saw it rather sooner than later. I mean, mostly with Pendle. And yeah, leading to the follow-up question, how do you view the competitive landscape right now? I would say right now it is a winner takes all, at least for Pendle on the EVM. Then of course you have Spectra, you have Rate X on Solana, and I think you have Extended on Solana, or Exponent. I always confuse the two. How would you say do each of these differ from each other, and what's is setting themselves apart?
Yeah, it's a great question. And I mean, to be fully honest, I mean, obviously they are the industry leader right now, and or the category leader, I should say. They have significantly more TVL than us. I think they have more reach than us. And we like I said before, we strongly respect them for what they've carved out, and even some of the user education pieces. We've looked to those and formed our own content around that because it's been very effective and it's very useful. And I think to even backtrack one step before I answer this step or this question, I think as the market and as DeFi has continued to mature, we've seen it at all stages. We have been there just like you have for every step of it, from I guess like the idealistic beginnings to the hedonistic middle to, I think, maybe the later middle is where we are now, where things are starting to get a bit more mature, but we're still not quite there. The hedonistic beginning is one of my favorites as well, with the fruit coins and the cat tokens. Man, that was enjoyable. I anybody could see through it as long as you didn't, totally right curve it. There's so much money to do, or there's so many things that were going on, is what I should say. So anyway, to focus though on your question, number one, Spectra is fully permissionless market creation. Any ERC 4626 asset, which is the standard for vault tokens, which we've seen this rise of this narrative of vault of vaults, of vaultification of every asset, especially with RWAs coming on chain. Any asset can have a market spun up for it on Spectra. And we've actually even seen this on one of the chains we're deployed on is Flare. And Flare is a very vibrant ecosystem, is what I'll say. There's a lot of it gives me shades of early DeFi, and it brings me back to that time, and it's very beautiful. But we've had users on there that are spinning up markets. They say they have these theses which are around like one of the tokens that are there. So they've spun up, I think, markets with expiries ranging from 3 months to 10 years for one of the tokens. And this is just purely like exploration of how these yield curves work. And it's been beautiful to see. And that's, I think, the power of permissionless market creation is you can not just get the markets that you deem necessary, but you can get the markets that the users deem necessary. And, we had a branded pool that we launched back to Flare as well. We had a branded pool that we launched for, I believe it was staked XRP. And this one grew, and we have a new one as well, and a meta vault for this too, which I guess we'll get to here in a second. But our pools that we launched did very, very well, but then a user launched one that had an expiry out 9 months later, and this one grew just as fast with no incentives, no marketing. I think it grew from like $0 TVL to 150K, which is nothing crazy, but the activity on that pool is insane. Like we're seeing, I think 500, 600K of outstanding assets minted from that pool between PTs and YTs, which is, I mean, a 5x, 6x multiple on a pool is crazy. You don't typically see that level of outstanding PT assets. I think if you had a pool that had 10 million to have 50 million of outstanding assets is crazy. And the trading we've seen is incredible. So we're a big believer in permissionless market creation. And we think that's one way that we're able to differentiate ourselves. And obviously there's implications for the long tail of yield bearing assets and all these things. So if I move to the next one, I would say the meta vaults and curator model. This is something that we just launched, less than a month ago now. And we've already seen some TVL growth. I think we'll see a bit more this week with some of the vaults that we're launching. But I think this is our biggest structural differentiator. They allow for essentially a new business layer, on top of current Spectra LPs. So currently how they work is they are an ERC 7540, which is like an async 4626 vault, ERC 7540 on top of Spectra LP positions. And it includes YT fee reinvestment. It includes, rollover of the Spectra LPs contained within. And this is step one. We had more functionality originally, and they're all managed by a curator, but we had more functionality originally in these meta vaults, but the market just wasn't ready for it. We said, we're going too far again. We have this vision of this bond portfolio manager where we're essentially able to maybe play out some of these tranching plays you might see in TradFi, maybe play out some of this maybe like repo bond style products. And all of this is possible now with meta vaults, but we're just not ready to roll that out to curators. We're not ready to turn all this on. We need to take this step by step. But anyway, that's the biggest differentiator. We're not just looking to build like yield trading. We're looking to build out the structural pieces for all of yield trading. Because you look in TradFi, they're not just trading on a single expiry. They're trading across the curve. They're trying to do more than just trade a single expiry. So next step from here is obviously our multi-chain strategy. Meta vaults allow for this. You can have a meta vault that lives on base, where the receipt token is on base, the entry point's on base, or wherever. But it can actually go out and farm LP positions, deploy capital into other chains in a seamless way. So, and it calculates NAV there on the back end. So you could have one, and we currently do, that is deployed on base, but it has LP positions on Avalanche. It'll have LP positions on ETH mainnet. It'll have LP positions across multiple different chains. So anyway, and this kind of solves like the fragmentation issue. So many times when we talk to teams, they say, we can't deploy on this chain and this chain because we don't want to fragment liquidity. We want to make sure that we're maximizing for the full amount of PT buys that we can. Well, meta vaults solve this, and they allow for you to have a single point of entry for all yield trading activity, and not just have it, hey, we can only have PTs on one chain. Hey, we can only do this because we want to maximize for the trader experience in one area. So anyway, I think I answered all the differences that I think. Unless I missed something, but yeah.
Yeah, I think that probably all the yield trading protocols right now are looking to either vertically or at least like horizontally expand their offering, because I mean, the quarter life crisis that DeFi currently is in is that realization that a lot of the traditional finance assets or their tokenized equivalents are much more interesting than just playing around with crypto native stuff. I mean, the yield farming meta of 2024 and 2025 around points was pretty nice for all the market participants, but we are slowly coming to the realization that unless we are fixing the discrepancy between non-existing like shareholder rights and these suggestion type tokens, we are not going to be able to sustain the current valuations. And as a result of that, many of the points programs are getting much less attractive. But to dive a little deeper into your product suite, can you walk us through the platform and maybe screen share just to walk through the different mechanics, how the PTs and the YTs work, how the pools work, and then yeah, once we have the basics done, we'll go deeper into MetaVaults.
Yeah, and I think actually one thing that I think, and you said we'll go deeper into MetaVaults. Okay, I will hold my horses. I have a tendency to get ahead of myself on this, so I'll pull up the screen first. Here, one moment. Maybe I'll start here. Well, I'll just share the actual Spectra app, and we'll start here. So, second, let me just navigate back to our home screen. I think is the best start. Okay, so I think the core mechanic here, if I click launch app, which I forgot it launches in a new screen or in a new window, new tab. I swear I've used a browser before. Okay, so you come here. If you come here, how we default is, well, in this case, I went to the fixed rate page, but if I come over here to pools, where should I start? So maybe let me think here. I guess we'll go over the core mechanic. So if I just click this pool, yeah, if I click this pool, what you'll see is you can enter into the liquidity pool. So this allows for these PT and YT assets to be minted, which I guess I'll start with the LP, and then maybe I'll go into what each PT and YT asset is. But when you enter an LP position, what you're getting is a representation of the liquidity that's within. So a lot of the times, actually, let me back up another step. You have a yield-bearing token. So in this case, this is AVUSDX. This is the junior tranche token on Avant. So it's earning, I think on default, right around 11%, 10% APY when you enter the LP position. So let's say you want to provide liquidity for yield traders of this AVUSDX token. What's happening is you're entering an LP, you're receiving within the LP, there's an equivalent amount of PT tokens contained within, as well as the underlying interest-bearing token. So, and then you also receive the YT token, which this is why MetaVaults abstract a lot of this away. You just receive a vault receipt token. But the LP itself, when you think of this PT and this YT, the easiest way to think of PTs and YTs is you have the PT, you have the YT, you add them together. That is equivalent to most of the time 1 unit of the underlying token. So if you have 1 PT of AVUSDX and 1 YT of AVUSDX, you combine them together, that equals 1 AVUSDX, because what the YT is it's a claim on the variable yield generated up until the expiry of that pool. And the PT is, you can think of it as a zero coupon bond token, but it's redeemable for the underlying at the maturity of this expiry date. So you essentially have this locked in fixed rate. So you may buy a PT. So if I come over here, you may buy a PT. Let's say you input 1, you would receive 1.198 PT AVUSDX. So at the expiry of this pool, which like I said is on May 14th, for using 1 AVUSDX, you would receive 1.19 PT AVUSDX, which would then be redeemable for this full amount at the expiry of the pool. This essentially is equivalent to, an 11.57% fixed APY. These graphs are very, very helpful, where you can actually see the implied APY and the base APY. You'll see this as you get into yield trading. The base APY is what the underlying token is actually producing. So on Spectra, we have a trailing base APY based on a 7-day trailing average pulled directly from the contract level. So a lot of the times you may go on to onto an interest-bearing token site. I don't need to say which one, but there are some that are out there, and maybe they pull a forward projecting APY. They may pull a 3-day trailing APY, a 30-day trailing APY. On Spectra, it's a 7-day base APY that we're pulling directly from the contract level on an average, day by day, based on the share price increase. And then the implied APY, which is actually what the market is valuing the interest or the the earnings to be at the expiry of that token. So this is where a lot of the times, if you have the fixed rate, you can usually get a higher than what you would normally be able to lock in with the PT token. If you come over here to the YT, you're able to then speculate on what the what the earnings may be from that actual token. So when you enter, let's say 1 AVUSDX, you would now get the equivalent of 62 YT AVUSDX. So this would be the yield from 62 AVUSDX until the expiry of that pool. This is an implied APY of 12.57%. And then the yield leverage, this is where a lot of people tend to get scared. This is essentially how much are you getting, like how much, what's the multiple? So if you're paying 1 AVUSDX, multiply that by 53.3, and that's the amount of additional yield you're generating from this. So when you have over here, this is what a lot of people, one of my favorite things to do is to come on the Spectra app and check the implied APY versus the base APY for every single token that's out there, and see if there's ever like a discrepancy where the base APY goes above the implied APY. There may be a potential arbitrage opportunity. Obviously, you want to look back at what the historical interest rates are, but you can come back and check this. But the implied APY is going to be what the market is essentially valuing if there's a points program involved or any additional potential yield sources that may happen there. So maybe the worst explanation I've ever done for what yield trading is. Oh my goodness, why am I failing so poorly?
But how do these scenarios arise where the base APY and the implied APY detach from another? And how in different scenarios would you be able to capitalize on that?
Yeah, so in a case where the implied APY is lower than the base APY, there may be more to say than what I'm saying here. So you'll want to kind of familiarize yourself with the market. But there are a few different things that could happen. There could be some, forward-looking yield adjustment that's happening at the protocol level. We've seen this recently with Sky and their SUSDS token. They're always adjusting the underlying rates. And if you ever see, hey, Sky is about to make an adjustment to their savings rate token and adjust it up or adjust it down, you can actually speculate on this, via yield trading. But sometimes there's just a blind spot in the market, where there are times where maybe the market isn't aware of a certain pool or isn't aware that there's a points program that's coming. So there may be some information asymmetry there, and you might be able to take advantage of that. Other times there's maybe the protocol itself is overvaluing what their points are actually worth. So there's just a lot to be said. There's so many theses you can play out when it comes to yield trading, where, hey, maybe this is a little too overheated on the YT side. Maybe we're seeing a bit of maybe too much hype on the points, and you can go over and buy the PT, the fixed rate, to help balance this out. You could say, you know what, I actually think that the fixed rate will produce better than what the points will be worth. Or if you have a separate thesis where maybe you think, the points will be worth more than whatever the fixed rate APY is right now. If you want to speculate more on the point side, you can do this very easily. If you want to speculate more, or I guess lock in that fixed rate, you can do that on the other side. So yeah, I don't even know if that answered your question. I think I got off topic here.
No, it does. When you're LPing into the pool, how are the trading fees structured? Is there a cut going to Spectra? Is it all going to the LPs? And how can you think about slippage, trading fees, and what order types are available? Is it all structured like an AMM, or are there limit orders as well?
So, okay, I guess here one at a time. when it comes to the LP, this is actually one of my favorite things to explain when we're talking to partners or we're talking to other protocols. The LP itself is actually the curve of the pool. So a lot of the times when you enter a traditional AMM like Uniswap and you're trading wrapped ETH versus USDC, you're trading based on the price. So the curve of the pool is adjusted based off wherever the price converges. You know, you may have 2000 USDC for one ETH, and this is where you are trading right here. And then this moves, you know, as the Oracle determines what the price of these two assets are. When it comes to yield trading and specifically Spectra, the curve of the pool is actually imputed based on the yield that's being generated. So this is actually determined based on if it's trading around 11% APY. This is a completely different curve than just price, and I think this is maybe one of the hardest thing for a lot of people to like wrap their head around. Is there's very little impermanent loss. A lot of the slippage just comes from, is there enough in the underlying LP? And I think there's two parts to this. There's actually less capital requirement to make good trades on yield trading than there is in a traditional AMM. Like you don't need tens of millions of dollars to have, tens of millions and hundreds of millions of tokens outstanding, from the PT and the YT side. But anyway, I guess let me backtrack. I don't want to get too far down that route. Trading fees are paid by the yield traders on each swap. So how it breaks down on Spectra is we have 60% goes to VE Spectra holders, 20% to the LPs, and 20% to the curved out, because we built on top of their stable swap and G pools. And it actually doesn't directly just go to the curved out. It actually goes to help boost the liquidity of one of the pools that we have there. But that is like an homage, like essentially a payment for using some of their tech. And then 80%, 80% of that is then collected as protocol revenue, and the remaining goes to the protocol treasury. So, and then to answer your other question, limit orders and order book, those are actually currently in production. We're running an audit for both of those right now. I think we ran like a quick case study of how much of competitors trading activity goes through limit orders. It was something like 70-80%. And we knew this before we launched MetaVaults, but we had to get MetaVaults out. We had to get this new type of structure out before we launched limit orders, because we knew that there's so much that we could do with MetaVaults. So we had to make a very intentional decision, is what I should say.
Yeah, I know that Pendle just launched a campaign a few days ago where they also started to incentivize limit orders across their pools. And I mean, yeah, the whole slippage and people yeeting the YT rate up temporarily, that has been a pretty big issue across like pretty much all of the yield trading protocols in the past. So I do think that an order book based model could improve conditions there a little bit. But yeah, having covered all the basics, I think now it is time to go over to the meta vaults. If you can give us the breakdown of what they actually represent, who's managing them, and how to use them as a Spectra user.
Yeah, most definitely. And I can also run through this here very quickly on our side. So meta vaults, like I said, huge UX improvement. If I come over here, this is one of my favorite ones that we've ever launched. I have a soft spot in my heart for the Flare ecosystem because of the memories they have for me from DeFi Summer. But it's very, very different. So you saw already how you enter an LP position. You get these two different tokens. A little bit of confusion on how these tokens actually accrue value over time. With MetaVaults, it's very easy. You input the amount of underlying token that you deposit it, and then you'll just see this. In this case, actually might be better if I show a different one here. I'll show VBUSDC Katana. You'll see the share price going up over time. So this is your actual yield, as well as the APY and a nice little graph here. You also have a min APY graph. This is if there's any Spectra rewards on top. And then you also see an allocation. So anyway, I guess to actually talk about MetaVaults. So I already talked a little bit about the liquidity fragmentation idea, where you can have liquidity spread across different chains. So if you see this one, actually you deposit on Base, and then it's got LP positions on Avalanche. So you can have these here. It also allows for the recapture of YT yield leakage. So all YT fees as you enter an LP in a balanced way, which you're receiving the LP position, you're receiving the YT token as well. There's YT yield that is created over time, and MetaVaults auto recapture this and compound it back into the LP position. So a bit of help there, as well as just access complexity. There's an allocator doesn't want to manage 5 different LP positions, 5 different PT positions across 3 maturities on 10 different chains. MetaVaults allow for a single, ERC 7540 receipt token that represents, a curated strategy. So it's composable across DeFi. It can be used as collateral. It can be deposited in other protocols, and you can, loop on it or maybe hedge your position in a variety of different ways. But this is like a basic overview of the benefits of MetaVaults. They were definitely inspired by the Morpho curator model, but I think it's taken in a very different way, where we're not just looking to allocate liquidity. That is definitely the V1 we're at right now. But like I said, we have this vision for a bond portfolio manager, and there's that there. There's also curators earn fees on AUM. These are outlined. We haven't turned on fees for any of the MetaVaults yet. I think the first one you'll see turn on this week will be for this Gamma Spectra USDC vault, and I think it'll be a 10% performance fee. So as the share price increases, you'll see 10% of the increase of that go to the Gamma curators. As you can see, 0% performance fee, 0% platform fee, and all this here. I think that's a basic overview of MetaVaults. One other thing that I guess I want to cover right now is the deposit flow. When a user actually enters a MetaVault, let's say they enter 10 USDC and deposit in, what there will be is there'll actually be a little bit of a lag time between the deposit entering the MetaVault and then actually being you actually receiving your MetaVault receipt token. So in this case, it's 2 days and 13 hours. And the reason for this is the MetaVault itself, since it's allocating across separate chains and across a variety of strategies, it just allows for those to settle before updating the actual share price and the AUM that's contained within, especially if curators are getting performance fees on AUM or on performance fee, you'll want to make sure that it's as accurate as can be. And for the time being, we launched this a month ago. I see for the foreseeable future, our dev team is 24/7 monitoring every single action that the curators take, every single action that happens within the MetaVaults, because one of the biggest things I covered before early on, how professional the Spectra team has been. Their biggest concern is they do not want to have user funds come at risk or potentially be hurt. So every single change we're monitoring, every single we have like an off-chain oracle that monitors AUM and calculates NAV. They're checking every single thing that happens. This updates 24/7, and we're checking every single thing. We want to make sure that this is going to be an institutional grade product and that actually works as we say. So as we continue to expand the capabilities, we'll continue to offer that 24/7 support and monitoring until we are certain that things are good. So yeah.
What role does the Spectra token play in all of this? I think you probably still have the VE model for it. Does it allow people to earn extra yield on top, or what are its current use cases, and how do you think it will evolve going forward?
Yeah, it's a great question. So obviously I covered before that we migrated from APW to the Spectra token right around the time that we launched our V2 model. There's a lot that I could say as far as this goes, but how it works now is you lock Spectra, you receive VE Spectra. You get benefits from this. You get a share of fee revenue, 60% of trading fees from pools that you vote on. So this is different than the traditional, or there are a few differences than the traditional just VE model. But if you're familiar with V33, if you're familiar with VLO and Aerodrome, you'll be very familiar with this. But when you use your VE Spectra to vote for a pool, you actually get 60% of the trading fees from the pools that you vote on. This is denoted in ETH and given to you on a weekly basis. You also receive an LP boost for Spectra emissions. It's like up to 2.5x. So this is, similar to like I said, the other two that I already called out, as well as a weekly rebase, which this is just for anti-dilution for lockers. And how do I see this going forward? I know that I know that Pendle recently pivoted to an S Pendle model, and we've obviously kept a very close eye on that. I would say that they've done a great job at getting liquidity locked up. And obviously, I think that there will be some additional uses for S Pendle in the future. Um, but we're keeping a close eye on it. I think right now, where Spectra is and our current stage of growth, we're very happy with the VE model. Um, but we are keeping our eyes focused on as things move going forward. So right now, I think it's a great growth engine. I think it creates organic demand for Spectra. I think we've had times where VE Spectra voters have enjoyed some very nice APYs. I think historical APY over time is 35%. So you're receiving nice bribes, you're receiving fee revenue and all this, and it's been very healthy for those people that have decided to lock. There's a time when I put out a tweet, and I don't know if I should say it, but I was paying my mortgage with my VE Spectra weekly earnings. I felt good. It was a very nice feeling to just take my bribe and fee revenue and just liquidate it and throw it into my monthly mortgage payment. So
These are
I'm
the
not saying that
actual
anybody should
real
do that.
world assets we got to talk about.
Exactly, exactly. I think one other thing that's worth mentioning that I didn't even talk about on MetaVaults, and I have my notes over here, and I just saw it. We are actually like exploring a few different ways that we can plug in some of these other yield trading protocols as adapters into MetaVault. So it won't just only be Spectra LPs, but maybe there could be a way where we could manage a portfolio of bonds. I said an on-chain bond portfolio manager. That doesn't just equal one yield trading platform. That is on-chain yield trading or on-chain bond portfolio manager across all the dominant yield trading platforms that are out there. I don't want to get too far down this, but we already have that in production. We're trying to find the exact way that we want to do this, but yeah, we have a huge vision for what MetaVaults can be, and there's a lot of potential for it, is what I'll say. We're exploring integrating Pendle LPs as well as any other yield trading platform that pops up over time. So as well as PTs and all these things. So there'll be a lot of actions that we can perform within MetaVaults, and I think that yeah, it'll look really good.
Speaking of growth, what is your current growth strategy like? And yeah, how and when do you expect to exceed your prior TVL all-time high?
Yeah, great question. Um, One thing I'll say is when we hit our TVL all-time high, I don't think that we were ready for it. That happened. I do a lot of work identifying early stage yield bearing assets, keeping my eye on the ecosystem a lot, is what I'll say. I'm very plugged into as much as I can be. And we just hit big on, I have like this evaluation matrix that I have for myself. And we hit really big on Resolve. And I knew that they were going to be big. I didn't expect all of that growth to come to Spectra. There was a point where they went from 1 month, they went from, I think it was 20 or 30 million TVL to 600 million. And Spectra captured about 60% of that, through our LP token, through outstanding PTs and looping that was happening there, and YT mints. And I don't think that our infrastructure is ready. We had launched this V2, but we had a whole list of other upgrades that we wanted to make, both on the user front and on the order book, on the AMM, and we didn't think we were ready for it. So I say this. So now we're sitting at around 35 million TVL. Very proud of that. There's quite a bit more that we see as growth opportunity here very soon, especially with MetaVaults out. We believe that this is like something that allows us to, we're not like, we are competing obviously with other yield trading protocols, but I believe that we're going in a different route. So maybe what I should say. So kind of three growth vectors, we go where the yield is. We're not just trying to win a single chain head to head versus any specific yield trading protocol. Instead, we want to be the best and the first like yield trading infrastructure anywhere that there's emerging ecosystems. So as ecosystems pop up, maybe for niche specific assets, we want to be able to enable MetaVaults to deploy there and to have different yield trading strategies that are played out. Each ecosystem partnership that we have is an opportunity for TVL incentives community And I believe that MetaVaults allow us to be very agile. When we launched Spectra V2, one of the first things that Gaspard and the founding team told me was, we want to be as agile as we can be. We want to really, because we have a smaller to moderate sized team, we can really move quickly and pivot to um, how we see the vision for the Spectra product, and we want to be the same way on the BD front. So on the BD side, I'm very locked in there, finding different ways that we can, grow our product. But I think really the biggest unlock for us is MetaVaults. It's MetaVaults are the biggest unlock. They convert one-time LP deposits into persistent compounding TVL. In fact, I was actually just talking to a protocol recently, and they had a market expire, and they had something like 25 million, a yield trading market expire that had something like 25 million of TVL in it. And they said, wow, we really hope that we can just get 5 million on this next expiry. And that was like a stark statement. 5 million after having 25 million? Like, is that all that you really want? But MetaVaults allow for this to be persistent compounding TVL. The auto rollover means capital doesn't leave at pool expiry. The YT compounding means TVL grows with these deposits, and then users can actually see this growth over time. Transparency has become such a big narrative shift in DeFi today. And then the curator model allows third parties to actually, we've seen this with Morpho, you don't just have a single BD. Now you have the distributor network of each curator that you bring on, and their and their tooling and all this. So that's what I'll say there. And then maybe one other thing is, we're tracking every growth in assets, and it's definitely a narrative, but really for me right now, I'm just trying to track where DeFi is going in general. And RWAs are definitely a big growth wave. And I think it's, who is it? Larry Fink said, tokenize everything. And we're going to only continue to see this move on. So we're trying to keep our eyes focused on this, but because we're permissionless, that allows us to capture, the long tail of RWA yield tokens. We don't need to wait to have these markets launched. We've had a lot of markets that have launched on Spectra, some of our biggest ones that we haven't even launched. It's been a user that said, hey, I want to market on XYZ, and they just launch it. There's like an LBTC, Lombard BTC market that just popped up. And then a couple of weeks later, there's 30 million of TVL sitting in it. And we didn't do any of that. This was just a user, and we only see the curator approach as a continuation of this. So anyway, there's a lot I could say. But I will say TVL is definitely a lagging indicator. We have a lot that we are focused on right now, and especially with MetaVaults being live, I think my days have been packed full. We have 5 minutes left on this pod. After this, I have 6 hours of meetings. I have a lot of strategy I'm going to run tonight. I'm really excited for the future of Spectra. Like, I'm a big Spectra token holder, like full transparency, and I'm happy to be, because I know where the product is going, and I'm very excited for what the future has in store. Just as much as I work, the dev team, they don't even care about anything. They are just focused on, this is the vision of where we see yield trading, where we see interest rate derivatives, where we see all of this going. And I've never seen a team just so focused on how can we make this vision of this product possible. And that's something that I love to get behind. And that's why I joined the team. It's why I'll have 6 hours of meetings and then 6 hours of strategy. And I've been up since, well, I haven't slept, but been up for a while, and I've just been consuming as much as I can as far as the data side, because I just see, strong potential in the product. So I don't know if that makes sense, but yeah.
No, I mean, it definitely makes me and hopefully also the audience pretty stoked for what is to come for Spectra for the remainder of the year and beyond. Maybe since we're getting closer to the hour, can you already tease a feature or two that we can expect in the next couple of weeks and months, or maybe some new meta vaults, some new strategies, or some new assets that we will soon see on Spectra?
Yeah, and I have to like really tame myself. You can see I can get ahead of myself very easily. So maybe I'll say we definitely have a couple of meta vaults that will be coming live very, very soon. We'll be launching on a few new chains soon. Um, And every time that we launch on a new chain, it's a new chance to iterate on our last launch strategy and to learn something new. So I'm very excited for these next launches. I'm very excited for this next meta vault that we have. It's going to be something that I think nobody expects. I kind of talked a little bit about the opportunity to integrate other yield trading protocols into Spectra meta vaults. And that is something that maybe in the next meta vault that we launch here very soon. It's either going to be the next one or the one after. We have a lot of curators that we're bringing on board as well. And gosh, I mean, I'm excited about everything, but I'll say one other thing that is short term. I told you that our devs cook a lot of product features, a lot of additional products. They have completely unreleased products that are very cool that now at least get to be integrated into MetaVaults. But there's something that I probably shouldn't say it. Never mind. I guess I'll say something else. I'm just excited for the future of the product. You know, we have order books that are in audit that'll be starting audit soon, as well as limit orders. Limit orders first, and then other features as well. But I'm just really excited to continue to see some of the TradFi plays that I used to have to do in treasury management actually come available on chain. Like I've never seen a future so clearly and with a path so defined as I do now, where it's not just, hey, we're going to trade on one expiry. Now it's, I can actually, you know, do some of this reverse repo stuff. I can start trading different curves. I can ride the yield curve as I go. I can do these things and actually then allow it to be democratized for anyone to take part in. So yeah, not really an answer, but as much of an answer as I can give at this time.
Yeah, I mean, what can I say? I mean, I think a lot of other people are pretty stoked for what is to come. Definitely sounds like we can expect a lot of launches of both vaults and features left in 2026. Since we're getting closer to the hour, where can people find you, Curtis, and the Spectra team, and how can they reach out if they want to work together?
Yeah, you can find me on Twitter, find me on Telegram, Twitter Absolute Unit. I think the unit is UKNIT. It's one of my favorite names from when I was first coming into DeFi. Find Spectra at Spectra Finance at Spectra_finance, and obviously the website is spectra.finance. Come join our Discord. We don't have a Telegram that we use anymore. You can DM me anytime if you want, and I guess open that up at Absolute Unit with 2 T's. And I'm always open. I'm always open to chat about anything DeFi nerdy, anything about the future of where we are now. So yeah,
Pretty cool. I'm looking forward to have you back on the show pretty soon, and yeah, hopefully talk about some more of the MetaVolt strategies, maybe together with one or more of the curators. And yeah, very much excited for what is to come for Spectra. Thanks a lot for coming on, Curtis.
thanks, Max.
Have a good one.
You too.